Okay, so welcome to the deep dive. We are diving headfirst today into some seriously choppy economic waters.
Yeah, you could say that.
We're talking the immediate aftermath of President Trump's new tariffs, and this wave of federal government layoffs that, frankly, has taken a lot of people by surprise.
Definitely a lot to unpack.
We've got two really important articles laid out in front of us. First one from U.S. News and World Report that came out March 6th.
Yeah.
And then we've got a piece from Reuters published the day after on March 7th. So the goal today, and I think it's a big one, is to cut through all the noise, all the speculation, and really give you a clear sense of what is driving all this uncertainty in the markets.
Absolutely.
And what exactly is behind this pretty dramatic surge in job cuts. I mean, this isn't just a little blip. This is significant.
No, it's a real trend. And you're probably listening because you need to get up to speed fast.
Right.
Whether it's for your work, your investments, or just because you want to understand what's going on.
Exactly. Knowledge is power, as they say.
Absolutely. And the U.S. News piece, I think, does a great job of setting the stage. It really emphasizes this feeling of economic uncertainty that's kind of pervasive right now.
Yeah, it's palpable.
It is, and it's directly tied to these unpredictable tariff policies.
Right.
And then, of course, these substantial cuts to federal jobs. I mean, that's a double whammy.
Yeah, and the Reuters piece kind of backs that up, right? It's pointing to some real weaknesses that are starting to show in the labor market, which, is never a good sign.
No, not at all.
And Federal Reserve, they're being understandably cautious. I mean, they're trying to figure this out just like the rest of us.
Absolutely. Try and read the tea leaves.
So the U.S. News article, it's very direct. The first thing it says, the word it uses to describe the economy right now is uncertainty. And it's not just talking about, general anxiety. It's specifically talking about this feeling that businesses have. They're in a holding pattern. They don't know whether to expand, whether to invest, or even just maintain their current workforce.
Yeah, and that hesitation from businesses, it's crucial because it has this ripple effect throughout the entire economy.
It's true.
When businesses aren't confident, they don't spend, they don't hire, and that impacts everyone. And a lot of this uncertainty, it really seems to come from the way these new tariffs are being implemented. It's erratic. It's hard to predict what's coming next.
It is. It's like watching a policy ping pong match, honestly. We had President Trump proposing these huge tariffs on Canadian and Mexican auto imports, and then boom, he seemingly reverses course after talks with the CEOs of Ford, GM, and Stellantis.
Right.
And then there were rumors about exemptions for agricultural goods, and then Mexico gets this 1-month reprieve, and then you have China basically saying, okay, we're ready for a trade war.
Yeah, it's a lot. And what's really interesting is the speed at which all of this is happening. These policies, they're announced, and then they're reconsidered, and then they're tweaked, all in the span of a few days. It's almost impossible for businesses, whether they're domestic or international, to plan for that. They can't build stable long-term strategies for their supply chains, for their pricing. It's just too unpredictable.
Okay.
And then you have the impact on international relations. I mean, Canada, they pulled U.S. alcohol from their shelves immediately.
Yeah, that was a pretty clear message.
It was.
Oh.
It shows that these tariffs, they have repercussions beyond just the economics. It's a geopolitical chess game as well.
Right. It's all connected in ways that we don't always see right away.
Oh.
And speaking of immediate reactions, the stock market has been, well, let's just say it's been a wild ride.
Oh, yeah.
The Dow, it took a massive hit. I mean, over 1,300 points down in a matter of days, and then it rebounded a little bit, 500 points, after the news about the auto tariffs. But then, almost as quickly, it started to drop again. It's enough to make your head spin.
That kind of volatility, it's a classic sign of anxiety in the market. Investors, they hate surprises. And these sudden policy changes, they're creating exactly that. It's like the ground is constantly shifting under their feet.
Right.
And Tony Welch from Signature FD, he summed it up perfectly. He said the risks are definitely elevated now, and if this uncertainty continues for, say, 6 months, it could be very problematic for the economy.
Problematic feels like an understatement at this point.
It might be.
And it's not just the financial markets that are feeling the effects. The U.S. News article, it also points out this huge spike in layoff announcements. We're talking the highest number of job cuts announced since the peak of the COVID pandemic.
The numbers are staggering. Challenger, Gray, and Christmas, they reported 172,017 layoffs announced in February alone.
Wow.
That's a 245% increase from January, and it's the highest monthly total since July 2020. Which, if you remember, that was right in the middle of those initial pandemic lockdowns.
Yeah, when the economy was basically frozen.
Exactly. And a significant chunk of these layoffs, they're coming from the federal government. 62,242 positions cut.
And when you look at the year-to-date figures, it gets even worse. We're already at 221,812 job cuts announced since January 1st.
Right.
That's the highest we've seen since 2009 during the financial crisis. And it's 33% higher than the same period last year. I mean, what's driving this?
So Andrew Challenger, he offered some insights. He pointed to this new Department of Government Efficiency. They call it DOGE.
Right.
And the cancellation of a lot of government contracts. That's a big part of it. But it's not just the public sector. There's also this fear of trade wars. We talked about that, and some bankruptcies. And we're still seeing job losses in retail and tech. Those sectors are still struggling.
In the Labor Department, they just released their initial report on unemployment claims, and it's not looking great. We saw an increase of over 1,000 claims just last week.
Yeah, that's definitely worth watching. I mean, it's just 1 week of data, but it could be an early sign that things are starting to soften in the labor market.
Right. And when you combine that with all this policy uncertainty, businesses are hesitant to hire. They're even starting to lay people off. It's a vicious cycle.
Absolutely. The labor market experts, the business leaders, they're all saying the same thing. This chaos, this unpredictability, it's causing companies to freeze their hiring plans, to delay expansion projects, to put everything on hold.
Yeah.
And it's creating this real sense of anxiety among executives. They don't know what to do because the rules keep changing.
Yeah. How do you plan for the future when you don't know what the future holds?
It's incredibly difficult. And this uncertainty is not just impacting businesses, it's also affecting consumers.
Right.
We saw consumer spending drop in January. And consumer sentiment, it's declining too. And people are starting to worry about inflation. We're seeing this fear of stagflation creeping in.
Yeah, that's a scary word.
It is. Stagflation, it's this combination of slow economic growth and high inflation. It's a really tough situation to manage.
And Noah Yosef from the American Staffing Association, he's saying that worker confidence is down. And he thinks we're going to see a longer-term pause in hiring. It's a big shift from right after the election when there was all this optimism, this feeling that things were going to take off.
Yeah, that honeymoon period is definitely over. Paul Goyden from Boston Consulting Group, he talked about this real hunger for growth and investment that we had. But now, with all this uncertainty, it's like everything's frozen. He used the word paralysis to describe it.
That's a good word for it.
It is. And there's this great anecdote in the article about a construction company executive. He said he wants to invest, he wants to build, but he needs clear rules. He needs to know what the playing field looks like before he's willing to commit.
So where does the government stand on all of this? What are they saying about these concerns?
Well, according to the U.S. News article, President Trump has acknowledged that the tariffs might lead to higher prices for consumers.
Okay.
But he's calling it a temporary disturbance.
A disturbance.
Yeah. But Commerce Secretary Howard Lutnick, he's taking a different approach. He's blaming the previous administration for the current economic anxieties.
Right, passing the buck.
Classic political tactic.
Yeah.
But it doesn't really help businesses or consumers who are struggling right now.
No, it doesn't. And there's also this speculation that President Trump and Treasury Secretary Scott Bessent, they might be trying to slow the economy down on purpose.
Oh, interesting.
The idea, apparently, is to drive down interest rates, which would make it cheaper to refinance government debt later this year, and it might even encourage the Fed to cut rates, which could boost spending.
That's a bold strategy if it's true. I mean, trying to manipulate the economy like that, it's risky. There could be unintended consequences.
Absolutely. And then you have Newt Gingrich. He's talking about this historical McKinley model. He thinks President Trump might be betting that these high tariffs will ultimately lead to more domestic investment and job creation, even if it means a few years of disruption in the short term.
The McKinley model. Huh. That's an interesting comparison.
It is. But the economists at Nomura, they bring up a really important point. They're saying there's no clear objective for these tariffs. Is it about negotiating better trade deals? Is it about raising revenue for the government? Is it about reducing the trade deficit? Nobody seems to know.
Yeah.
And that lack of clarity, it just adds to the uncertainty.
It does. It makes it even harder for businesses and investors to plan for the future.
Exactly. Okay, let's shift gears now and look at the Reuters article. They confirmed that there was some job growth in February, about 151,000 new non-farm payrolls.
Okay, so that sounds positive.
It does, but the headline of the article, it says there are cracks emerging in the labor market.
Cracks emerging, so something's not quite right beneath the surface.
Exactly. The job growth numbers might look decent, but the broader unemployment rate, it actually went up. It's at its highest point in almost 3.5 years. And we're seeing more and more people working part-time because they can't find full-time jobs.
Yeah, that's a classic sign of a weakening labor market. People are taking whatever work they can get. And the number of workers holding multiple jobs, that's also at its highest level since the Great Recession. So people are having to piece together income from different sources.
Right, just to make ends meet.
Exactly. It's not a sign of a healthy economy. Bernard Bemol from the Economic Outlook Group, he called it shifting winds in the labor
The
market.
shifting winds.
Yeah. And Scott Anderson at BMO Capital Markets, he thinks the economy is rapidly cooling in the first quarter, although he doesn't think we're headed for a recession just yet.
Okay, so not a recession, but definitely slowing down.
Right. Now, the article does mention that the winter storms might have had some impact on the February job figures.
Right, that makes sense.
But Julia Polak from ZipRecruiter, she has a different theory. She thinks employers might be cutting hours instead of jobs, which would explain why the average work week is getting shorter and why more people are working part-time for economic reasons.
That's a good point. So instead of laying people off, they're just giving them fewer hours.
Exactly. Which is still not great for workers, but it's better than nothing.
True. Now, when we look at specific sectors, Reuters reports job gains in healthcare, financial activities, transportation and warehousing, social assistance, manufacturing, and construction.
Okay, so some bright spots there.
Yeah. But as we saw in the U.S. News article, federal government payrolls, they're down, mainly because of DOGE.
Right.
And there was also a slight decline in professional and business services.
So a bit of a mixed bag overall.
It is. So what about the Fed? What are they going to do about all this?
Well, according to Reuters, they're expected to keep interest rates unchanged for now while they try to figure out what's going on with the tariffs and the immigration policies,
Okay, so they're in wait-and-see mode.
basically.
Hmm.
But the financial markets, they seem to think the Fed will start cutting rates again as early as June.
Interesting. So the markets are betting on more stimulus.
It seems that way. But Jerome Powell, the Fed chair, he's been saying they don't need to rush into anything. They want to wait for more clarity on the economic outlook.
Makes sense. You don't want to make a move until you're sure what's going on.
Exactly. Now, one other thing that Reuters pointed out, there was a dip in payrolls for retail and for restaurants and bars.
Huh, that's not good.
No, it's not. Part of it might be due to a supermarket strike that happened during the survey period, but it could also be a sign that consumers are starting to pull back on their spending.
Yeah, if people are worried about the economy, they might eat out less, shop less.
Exactly. Now, on a slightly more positive note, average hourly earnings did go up in February by 0.3%.
Okay.
And the annual wage growth is still pretty strong at 4.1%. So that suggests there's still some momentum in the economy.
Some life in the old girl yet.
Right. But the worries about stagflation, they're still there. Consumer spending is weak, home building is down, and the trade deficit surged in January, largely because of the tariffs. The Atlanta Fed is even predicting that GDP will shrink in the current quarter.
Wow, so they're actually forecasting negative growth.
They are. And the broader unemployment picture, it's not pretty either. The official unemployment rate ticked up to 4.1%. Household employment is down, labor force participation is down, and more people are working part-time because they can't find full-time jobs. All of that pushed the U6 unemployment rate, which is a broader measure of unemployment, up to 8%. That's the highest it's been since October 2021.
So,
Yeah.
not a great picture.
Not really.
Huh.
And we also saw the number of people holding multiple jobs. That's at its highest point since April 2009.
Wow.
Conrad Quadros from Breen Capital, he put it simply, the economy is facing rising uncertainty.
Rising uncertainty, that seems to be the theme of the day.
It does.
Okay, so let's recap. What are the key takeaways from all of this?
Well, the big one is that these new tariffs and the federal government layoffs, they've created a huge amount of economic uncertainty. The markets are volatile, businesses are nervous, and we're seeing a significant increase in layoffs.
Right, and even though there was some job growth in February, the underlying data suggests that the labor market is starting to weaken.
Absolutely. And the future of the economy, it really hinges on what happens next with policy, what decisions are made, and how do those decisions impact business confidence and consumer confidence.
Right. It's a lot to think about. So here's a final thought for you, for everyone listening. Given how quickly things are changing, how unpredictable everything is, how should we prepare? How can individuals and businesses build resilience in the face of this uncertainty? Maybe it's about diversifying your income, learning new skills, or adjusting your investment strategy. We've talked about some of these things in previous deep dives, but it's something we all need to be thinking about right now. because the economic landscape is shifting and we need to be ready to adapt. Thanks for joining us on the deep dive. We'll be back next week to, well, dive into whatever's making waves then.
See you then.
Bye for now.
Bye.